You're listening to the SAFM Market Update with MoneyWeb, brought to you by the Escalator Funds from Discovery Invest. Discovery is an authorized financial services provider. Imperial Chief Executive Hubert Brody with us in the studio. Imtiaz Ahmed's also coming. He's our market commentator tonight. Imtiaz, if you go back for the last 6 months of last year, you'll probably find that Imperial, if you were to calculate the top 40 shares, Imperial probably beat the rest of them because it's up 28% in the last 6 months.
In the last 6 months, absolutely. I think a lot of the pain was taken in the first 6 months, Alec. That's where the earnings disappointment came. That's where new management was introduced. And I think Hubert's done a very, very good job in convincing the market that things have stabilized. They've sold off certain assets. They've refocused the business, and I think the market's taken heart from that. However, we must keep in mind that motor vehicle sales remain under pressure, and that remains a cornerstone of Imperial. But I'd love to hear what Hubert has to say about this.
We'll pick up on the motor vehicle sales and the BEE transaction in just a moment. But let's go back to the 19th of December. Most people are on holiday, and you brought out a good news announcement, which is amazing. Most of the times we see the bad news announcement coming out when nobody's around. But in fact, it said that the sale of your aviation assets have now been completed, and you're not getting the 508 million that you said you were going to get, but in fact getting in 540 million. Now, anybody looking at this announcement would have thought, instead of 508, you'll be only getting in 408, so you kind of kept it out of the marketplace. But of course, that isn't the case. What changed that ensured that you got a little bit more than anticipated?
Thank you, Alec. It was mainly due to currency fluctuations. A lot of the deal, as you know, aviation assets are mostly dollar-based assets. And the rand weakened since the time when we got to the final details of the deal. And at payment date, the currency was much weaker, and that gave us a couple of million extra.
All right, so you had the benefit of the currency and weren't hit by the contraction of the global economy?
No, not. This was all just a final pricing detail.
And now that the aviation assets are off the book, where are you sitting as far as your debt's concerned?
Look, our debt, the aviation assets brought in another approximately 400 million of cash, and our debt at the last year end, net debt was 8.5 million. We also
8.5?
8.5 billion. Sorry, yeah, net. And we also received about 1 billion on the sale of Tourvest. So that plus the aviation minus some dividends brought our debt down even more.
Where are you aiming to have your debt levels?
Look, Alec, our debt to equity ratio is really the level. It depends how much equity you have in the business. It depends what your cash flows are relative to your debt, and that's really the way you need to look at debt. But we look at a debt to equity ratio somewhere between 70 and 90% as optimal for our group. A very large part of our group is actually heavy asset intensive businesses like our logistics businesses. We own many vessels in Europe, and we own transport equipment in Southern Africa. And this is assets that you can actually gear quite highly.
Construction equipment?
No construction equipment.
No,
transport.
You got out of that with the extra.
That was with the unbundling of Equestra.
Yeah. Impius mentioned the motor vehicle sales. I said to David right in the beginning that it appears that people are still buying Toyotas but not really interested in BMWs and Mercs. Is that accurate?
I wouldn't, look, Toyota is always a top seller relative to the others. But Alec, Toyota recently announced their first a loss, basically, in recent memory as a company globally. So
even they're getting hurt?
So they're certainly getting hurt.
But relatively speaking?
Relatively speaking, I would say more the value for money type of classes of vehicles, the runarounds, the vehicles that has to do the hard work. Those are the ones that still sell more than the more luxury types.
Have you had to close down dealerships?
We've closed a couple of dealerships. In fact, last year we closed about 25 to 30 dealerships, and there's probably about 10 to 15 that we're closing right now. So that's a good look. We have approximately 260 dealerships. But that's a good couple of dealerships. Unfortunately, it affected about 500 jobs.
And the tough thing is that it's not that the people working there have done anything wrong.
Absolutely.
It's just the economy itself. Are you expecting that things have stabilized there yet? Have we hit the bottom?
I think we're close to the bottom. We're closer to the end of this than we are to the beginning of it, as far as the local consumer economy is concerned, and the purchase of dealerships. Even on a marginal basis, the rate of decrease in sales have actually become less than what it was in recent months. And our view is that we're going to have a softer landing in this economy, based on what things that David has also said earlier, than what the global motor industry is going to see. And this is based on fuel costs have been down so much, inflation coming down as fast as it will, interest rates that will come down, and banks will loosen up their credit criteria in the medium term.
It's interesting listening towards the end of last year to David Sussman from the JD Group, who felt that the worst was behind us. He felt that sales, certainly in furniture, in his industry, would start picking up. Are you seeing something similar, or in motor vehicles, are we still some way off from the bottom?
It might take a little bit longer, closer to the second half of this calendar.
What about that BEE transaction, the one that's been causing so much heartache for shareholders?
We've really sort of dealt with that transaction by underwriting the transaction in a way that it actually can't trigger a complete collapse of the transaction. That would not be in the interest of Imperial if a particular dip in Imperial share price triggers it. So we've protected the transaction from that. And further upside in the transaction now going forward, significant part of that is to the benefit of Imperial, because we've provided vendor finance, which is the lowest ranking level of finance, and that's what's at the risk right now. So as you know, in our shareholders' interest and our company's interest to protect the deal at this stage.
MTS, are you feeling a little more comfortable now that your Imperial shares are safe?
I think we're waiting for Tito. I'm sure Hubert's waiting for Tito. If Tito were to cut interest rates going forward, I think there are 2 or 3 benefits Imperial would see almost immediately. That debt level that Hubert's just talking about, the 8 billion, quite clearly would pay a lower level of interest. And quite clearly, lower interest rates will spur demand for credit and, again, motor vehicles. So if interest rates were to come down, which I suspect they will this year, Alec, Imperial would be a share to start looking at. Although for me, I think it's still early days. I'd like to still wait a little bit.
And what does the eloquent Mr. Shapiro think of that?
I agree with MTS. I think that we're going to see interest rates coming down. I think there's going to be a lot more money in the consumer pocket this year. I think the only thing holding people back is confidence. And I think as soon as we start to get a little more confidence, so they'll loosen up their wallets. I think with interest rates low, it's going to take away the attraction of saving, unfortunately.
But Imperial itself?
I think we've seen the worst. And I was just talking to Hubert before. To me, the best place to go is the Imperial Pref shares, which are giving you
Where do you buy them? Where do you
on
find
the
that?
market.
Mm-hmm.
They're 16. If you think Hubert's going to, this company's not going to go belly up. That's the worst case scenario. But they're giving a 16% yield now. Of course, there's no capital movement on this, but a 16% after tax return. So that's where I am.